around the disruptions that have been caused because of the Russia-Ukraine conflict. Do pharma API companies get impacted as much due to various factors around the world, including disruption in supplies, disruption in shipping, and disruption in the production sites of some major global manufacturers? To talk about that, Dr. Sanjay Chaturvedi of IOL Chemicals and Pharmaceuticals Johnson. The precondition, of course, that I've set is that because they would be in a silent period, we'll not talk too much about IOL specific numbers, but get a broad idea. Dr. Chaturvedi, good having you. Thanks for joining in. Hope all is safe.
Thank you. Yes, all is well.
Can you tell us a brief about how big a disruption is this conflict causing for the industry and the areas that you operate in, and your company as well?
So Neeraj, there are really three types of disruptions that have taken place. One is the raw material disruption. The second is the shipping disruption that impacts the logistics and supply chain networks. And last but not the least, the big impact is actually in energy. So if you look at the energy costs in India, they've gone up dramatically, whether it is gas, fuel, or even coal. Coal is hardly available right now to the industry. So if you factor all of these in, it does seem like the perfect storm. And I think what I would say is that we are all in the same storm, but we are in different boats. And what I mean by that is some companies are impacted to a much larger extent than others. So let me give an example of IOL. In our part, our major product being ibuprofen, we are completely self-sufficient. We don't rely that much on imports for raw materials. So we are perhaps not that much impacted. Whereas other companies that have other range of products where the raw materials are entirely imported, they would be impacted to a much larger degree.
You mentioned energy disruption. Now, is this more profound for companies which are in the direct region of the conflict, which is European companies, and therefore is there a secondary impact for you? And of course, a prequel to that question is the primary impact that it has. Now, while crude and gas prices in Europe have cooled off a bit, we've seen APM gas price revisions in India, and of course, fuel prices have been hiked quite systematically in our country as well in the last few days. Though yes, you might be a corporate buyer and the rates might be different as well on the basis of the import. But can you brief us on that?
Yes. So, you talked about, Neeraj, companies that get directly impacted because they get their energy from Russia. Those will be typically manufacturing sites in Europe. They will certainly be impacted. We've most recently seen announcements from one of the leading chemical manufacturers, BASF, saying that their production could be impacted by as much as 50%. So, that would make a huge dent in the global chemical markets. India, to a large extent, is somewhat insulated from this because we don't get our energy directly from Russia. But having said that, what you just alluded to earlier, the prices of energy have gone up considerably. And more than the prices, imagine if you are running a boiler that is a coal-based boiler, you would actually have no coal available today as an industry because industry is not getting coal based on the new government guidelines. So I think energy is going to get impacted, and therefore, production to a large extent really depends on energy. And if those input prices go up, most certainly the prices of manufacturing will go up, and they will have to be, passed along to customers.
Is there a situation, Dr. Chaturvedi, that you might have the demand right now, but you're not able to fulfill it because your manufacturing also has gotten impeded?
So what is happening, Neeraj, is the demand is certainly there. We are able to manufacture, but our manufacturing costs have gone up. We are not able to pass along the cost increase at the same proportion or at the speed at which we would like onto customers. So, there are certain products where, a lot of medicines where if the price of one goes up, a customer may opt to switch to an alternate medicine, a different API, so as to speak. So I think what remains to be seen is we'll have to wait out maybe another couple of months before we can cast a judgment on that. But certainly the cost of manufacturing has gone up. We've tried to improve prices in certain APIs, and that has happened. Maybe not at the same pace at which we would like. And I'm sure most of my competitors are facing similar situations.
Just a quick follow-up there. We were talking to Kotak Mutual Fund yesterday, and they said that across industries, they were talking in general for India Inc., that the impact on margins in quarter 1, which is the current quarter, will be even more pronounced than what the impact of margin would have been felt in Q4. Would you sense the same for your industry and your company as well, that Q1 could actually see a bigger adverse impact on margins?
I think it depends on companies that have strong balance sheets and have, basically gotten enough adequate stock of raw materials at the previous prices. They won't see as much of an impact. Whereas companies that kind of rely on, weekly ordering or, bi-weekly ordering, they would certainly see this impact much worse.
Okay, so Q1 could be actually worse for a select band of companies as well.
Correct.
Okay, very interesting. What about, I asked you this question and you responded to that briefly. You are saying that currently you're not as badly impacted on the capacity utilization, but if things continue in the same fashion and if availability of coal or other raw materials for running the power plants or the boilers, etc., is not available, then your capacity utilizations might go down, even if demand were to go up because a BASF or some other global company is not quite able to fill in the supply chain any which ways.
Neeraj, that's certainly a possibility, but it has a low probability for a company like IOL. And part of the reason is a lot of what we sell is really in the domestic markets, not as much in Europe or the US. But companies that have large exposures to regulated markets will most certainly feel the pinch and the impact.
Okay. And then one of the reasons, Dr. Chaturvedi, did I thought we should talk because there's so much of confusion currently when it comes to the investor fraternity. With all good things, what's happening on Twitter and WhatsApp, etc., but a lot of misinformation. And therefore, just wanted to understand from you, the common belief was that IOL will get tremendously beneficially impacted because global suppliers are shutting down operations because of the war, and that will result in tremendous uptick in supplies as well as pricing.
Yes.
How would you address that particular quote-unquote rumor?
So, we live in an interconnected world, Neeraj. So if, one of the leading players in Europe were to shut down, yes, it would have an impact on chemicals. Would it have a direct impact on ibuprofen, which is what some of the investors are worried about? I doubt that, because the ibuprofen that BASF manufactures is really in the US facility and not in Europe. But are there, inputs that are made in Europe that feed into the facility in US? I am not really aware of that. So maybe that could be a factor. But what is very clear is that if BASF suffers, the rest of the world will also sneeze.
Okay. Well, the US analogy. Great. Dr. Chaturvedi, final couple of questions really. One is more on the policy environment, which seems to be tremendously beneficial, the government's push on manufacturing. Very curiously, and please correct me if I'm wrong, but we saw a fairly feeble response to the initial PLI drawouts for bulk drugs, only for that to be resurrected, and then seeing a fair degree of response as well. Pardon my ignorance, but have you been a participant in any fashion whatsoever? Why or why not?
Yes. So there are two questions that you've asked, Neeraj. I'll answer the first one. That in the first one was a feeble response, because if you look at the products that were selected, by definition, these were products for which it was not just a manufacturing game, it was a technology coupled with manufacturing game. So Indian players did not have the technology, and therefore, how do you scale up manufacturing if you don't have the basic technology? And a lot of them were fermentation-based APIs, so they still continue to be imported, and only that was the reason for the feeble response. Yes, we did participate in a subsequent round of the PLI scheme, and we were not awarded that. And there are certain technical reasons why our application did not go through, and we are doing all the remediation required to do that. But I think the PLI scheme is certainly a step in the positive direction. while I'm not a complete believer in Atmanirbhar, because we do live in a globalized world. So if we go into Atmanirbhar and so does every other country, where does that leave you?
Sure.
So everybody may want to be Atmanirbhar, but at the end of the day, we live in one world, one blue planet, blue dot, where we are interconnected. I think to a large extent, we need to understand that in the pharma value chain, API is just above intermediates, and then you have the formulations. Sometimes it is possible to pass along the cost increase to formulations, and the formulations and consumers will also accept that price increase. So the government, for example, very recently revised the prices of certain drugs. And I think all of these are steps in the right direction, because had the government not done that, the pricing pressure would have been so tremendous on the API manufacturers, given the rising input costs, that the small to mid sector enterprises, many of them would have been in deep trouble. And I should also add that one of the things that has kept us afloat as IOL is, we've de-risked the company sufficiently away from ibuprofen. So we have a host of other APIs as well, the metformins, the clopidogrels, the pantoprazole, levetiracetam, fenofibrate, and so forth. So this segment, the non-ibuprofen segment of our portfolio, was rather insignificant 3 or 4 years ago. But this last financial year, it has certainly more than 30%. And that's the growth that we are going to see in the company. It's not just the ibuprofen growth.
Actually, that was going to be my final question. I have read reams and reams of opinion from interested parties about how APIs, which had, pardon my saying so, but a near forgettable 2021,
yes,
so to say, would come back very strongly in 2022. Now, is that a hope trade, or is that a distinct possibility, Dr. Chaturvedi, for you and for the industry?
Okay, so I think for the industry at large, it is a hope. But for companies that have the scale, sufficient backward integration, and a strong balance sheet to be able to manage the working capital cycles, for them, it is not just a hope, it could be a reality.
Typically, a good company will only outrun the industry growth rate by a few percentage points, Dr. Chaturvedi. Do you reckon that the industry at large could also grow? Or will it be only a handful of companies, and therefore the growth out there too, while will be there, will not be outlandish?
I think the industry at large will grow, because if you look at the last 2 quarters for the API industry, they weren't particularly healthy. So, I think the industry has bottomed out. So, it's going to come back to a more normal performance level.
Great. I want to ask you for more. Maybe we'll talk post your numbers, Dr. Chaturvedi, but thank you for joining in and clarifying a lot of issues.
Thank you very much, Neeraj.
Now, the pleasure was ours. Viewers, thanks for tuning into this leg of